Good morning. My name is Scott Redler, Chief Strategic Officer at T3Live.com.
And I'm Chelsea Oliver. Welcome to today's morning call. I want to start out by saying we have mixed markets in the world today as we wake up from the very unfortunate attacks in Brussels. Our thoughts and prayers go out to everyone involved in this tragic event. Scott, do you think news of this terrorist attack will raise volatility in the markets around the world today?
Well, anytime you wake up and you hear about people dying, unfortunately, by these cowards that just blow themselves up, first it gets you upset, and then you figure out what kind of fear does it create elsewhere. 10-10 wins on the way in, and they're already talking about how they're raising the terror alerts here just in case it's coordinated everywhere. So I did look overseas to figure out what kind of response happened. Asia was pretty much closed by then, and they had a mixed session with the Nikkei up almost 2%. But then you looked at Europe because it was in Brussels. So what kind of response did they have? And the DAX was down a lot, to start. But then by the time I got into the office, it was only down 0.5% and actually even went green. So at this point, the markets are taking it in stride. So if we take a look here at the S&P, our futures were down 10 handles, and now they're only down like 5 or 6. We want to see does anything change. So I'd say for today, try to keep your TVs on low because everyone's going to be talking, saying their opinions, and et cetera, et cetera. Let's see what the market wants to say about it, with us. So if you look here, this is high-level support. If we hold this 241 area, that would be super impressive. That would be like, wow, after this entire move, from the lows to, prior resistance, we have a terrorist attack overseas, and that's all the sellers could do. If we get below 2041, you then could see a bit of a shakeup towards the 8-day moving average. And the 8-day moving average now is at 2028. So this is support 1. Again, if we hold that, I think anyone who's been trapped short is going to be like, wow, I can't even get out of my short considering the different types of levels we've had here, where you had your first move, you had your red dog reversal, and then obviously it's been holding the 8-day since. So here is 2041, and here is 2028. We could pull back to 2028 and still be in a very strong market. We could even test a 200-day and be in a big tactical uptrend. But at this point, we'll see what today's events happen, and we'll measure the landscape to figure out clues on what could possibly be next here.
Right, and can you go over the levels that we're seeing in technology and the Russell?
Yeah, both are important because tech hasn't been really leading, so we'll see if it turns down first, and the Russell played catch-up, so I feel like you want to line up the Qs and the IWM with the spiders to figure out, does the speed and composure change? So if you look here at the Qs, you'll see that it's been very tight. So, this is now really identifiable resistance and support, and you have this trend here intact. So if the composure was going to change, you'd probably see it, in the Qs here. You would see this break. So support here on the Qs is 107.12. As long as we stay above this, just say even give it a little bit more room, this 106.80 area, you have to be somewhat constructive. But a hard break below this, maybe reduce risk, and some might even be short. As far as the IWM, lots of tradable moves. I posted them. We try and go over them here. This was when you had your descending channel where we held in here after the move off the lows, and then since then, big move, above the 8-day, flagged again. Gave you a nice move last Thursday into yesterday, and now it's getting tight again. So if the market and the Russell wants to stay real strong, here's your 8-day, comes in a little bit closer to like this 108.70-ish, and if it happens to go from red to green today and flags again, maybe if it truly has that destiny with the 200-day, which is way above. So this is the area that if you trade actively and you've been holding so swing longs, you want to make sure it holds because, again, this move from the lows to here, you want to stay in this trend until the trend changes. And as of now, the trend is intact, and we'll see if the overseas events has any bigger volatility.
Banks have been trying to act in line as they've been lagging the last few weeks. What area needs to hold to gain some momentum here?
Right, they started off real slow, and then on the Fed day, all the shorts pounded in, saying, "Oh, we have a dovish Fed, let's get short." And then on Friday, J.P. Morgan, ignited them again, came out with an additional buyback with Bank of America. So the question is, can they play catch up, or are they going to turn down and, lead the market lower? And the market's not going to get pressured, or can't get too pressured without the banks starting to fall apart. So if you look here real quickly at the XLF, it hasn't been falling apart whatsoever. You have this trend off the lows, just like everything else, and here's your 8-day moving average. So until this were to break, you should not be so bearish. Obviously, it's a little long in the tooth, so if you're anticipating it, you got to be careful. So at this, what is this level here? This level here is about 2247. That is high level support. If you want to look at a few of the names, JP Morgan is what had the news on Friday. You had a nice little bull flag descending channel that broke to the upside. So for this to stay strong, you probably want to see JP Morgan hold Friday's low, which is 59.66. If it were to hold that low and go sideways, maybe you get another trade. You look at Goldman Sachs. Goldman Sachs also, has come down a long way and hasn't really done much. As much as we've rallied, this is still in this lower area. And I would say at this point, if it could hold 154-ish, maybe it gets the opportunity to trade above this and reclaim some of the moving averages. But this is this is a big time laggard, just like Morgan Stanley. Morgan Stanley's been a laggard also. So at this point, you had a little red dog reversal yesterday, Morgan, right into resistance. So if you want to take a quick look here, you could see it a little bit more clear. So if that's the case and you get out of it, I would think for this to be any good, it's going to have to hold this little ascending channel here. And if it were to break, that's around 2440. So I see a lot of ascending channels, Chelsea, all across the board. And as long as we're still in them, I would say, don't have short on the brain for all the traders out there.
Yeah. And now what about gold? Gold is up, as this usually happens when terrorism strikes. What are some levels that you're seeing in the GLD? Well,
that's a good point. Whenever some type of event like this happens, you could create fear, and gold is considered somewhat of the fear trade. And if you look at the GLDs, you'll see it's been a little erratic up here, but still holding this upper range. This is some key resistance right there, and it's turned lower. So it's still above the 21-day moving average, still above support. So I guess yesterday's high is 119.30. So we'll see if we can get back above this and stay above this, and then it's all of a sudden knocking on that door of the descending channel again. But I would be careful chasing the up open. I think it's up like 80 cents. So maybe give it 30 minutes to settle out, and if it doesn't look like it's going in and stalls, maybe you short a little bit versus the high, because it seems like it's been wanting to come in a little bit. But if it starts blasting off, you have 119.30, then you have 120.34, and then you have big resistance coming across here at around 121.18.
High beta tech is very mixed. What are your thoughts on Google, Amazon, Netflix, and why don't we throw in Facebook in there as well?
Well, just put all the boys together.
Everything, yeah.
There you go. Okay. Well, they are all acting a bit different. I would say first, let's go with Google. Google's been the strongest. Google, had a big move, off of support, and now it looks like it's trying to flag again. If the market's going to hang in there, you'll probably be able to buy Google and let it go from red to green. And this is a nice high-level flag above the 8-day. If the leadership's going to get hit, this probably, loses 751. Okay, and then you see some downside. So I would say look at Google to make sure it holds 751. And if it starts to break above this spot, I think that'll show that the market's ignoring what's going on. Amazon a little bit different. Amazon's been a little beaten down, and had a decent red dog reversal yesterday. But you got to be a little careful because Raymond James downgraded it today. So it's off a little bit. So I would say, let it put in a 15-30 minute low and perhaps see if you could buy versus this spot here, which is 538. So if it wasn't downgraded, this would be probably something I would turn to, down $5-6 to see if it goes green and get some, continued buyers from, this support level. Netflix, I think, is much more constructive. Hasn't been the Netflix of old, but it is trying to hold. Just say you could draw a line like this, trying to hold above 99.50. If it could, go green today, and they want some, some leadership, it would have to then your next, buy area would be above this 102.40 for a move up into the 106s. So this to me is something maybe to turn to, but it's, again, this is going to have to hold 99.50. And lastly, Facebook. Facebook, has been leadership status, for almost multiple years now. You could draw you could draw this, line here now, where this is your new ascending channel. It took out this 110.50. It's been holding it. So I'd love to see this thing go green and then perhaps take out this 112.75 to go back towards high. So I would watch to see if any leadership comes in Facebook and Google today to go green and go, and if that's the case, you're not going to get too much downside in probably the overall market. But a move below the 8-day, then all of a sudden, boom, some momentum gets lost, and I think I'm long Facebook. I'd love to be able to buy some to go green and add, but if it doesn't act well in the first 30 minutes and starts to get below this 110.55, I'll probably be out of the way.
The Apple event didn't seem too inspiring yesterday, but there are positive comments about the new, smaller iPhone. Will you be looking at this for opportunities today?
You did say yesterday you would get.
I said I'd want a bigger one.
Did you?
Yeah, I did.
Oh, so you're
but
not
I have the 5, so.
So would you go out and get
the big one?
So you're not going to go out and buy this one?
Maybe. I'll have to see it.
All right, well,
I'm a visual person.
There you go, visual.
Yeah.
That's good. I'm the same thing. I like to look and touch and versus see it on a TV screen. But there were some positive comments, and typically they try and press and sell in Apple event, and they couldn't really do it. I actually got a little short. And I was playing around with it. I'm flatted, so I would look at it today to see if it can go green. The doji close yesterday gave some indecision, so wasn't sure what to do. So I was like, I'm going to wait and see. So what we want to do is go back to the chart here. Here's your 8-day moving average. It's been above this ever since clearing this 98 spot, and then it actually held it right there. So at this point, see if it holds the 8-day, which is a little bit lower, and if it could hold above yesterday's low, even better. So I would look to this to see if it's buyable on weakness, but if it starts to break this spot, I would get out of the way. But all in all, there's a lot of mixed signals with Apple. The chart's still below the 200-day. It's been in a downtrend ever since over here. But perhaps a smaller phone in the middle of their next iPhone S refresh could add a little bit of revenue and whatever. So I would say I'm going to look at it, and I might get in there a little bit today if it shows some relative strength.
Good. And I know yesterday we looked at one of your picks from the 2016 report, Square.
Yes.
How did that play out for you?
Well, I hope it played out well for everyone because the timing on it couldn't have been much more perfect. It had a perfect type of pennant pattern with even a little bit of a cup and handle. And if you look what Square did yesterday, ba-boom, there you go. New issues sometimes are heavily shorted, and when they're tight, they could expand, and that's exactly what happened with Square yesterday. Not sure if it gets follow through right away. The futures are down a little bit, so I'd say as long as it holds, I would say this 1250 to 13 area, there's a chance that it could take out yesterday's high and make its way back towards the post-IPO high. But all in all, it's now following the 8-day, which is a nice new trend for new issues. People don't love Dorsey, but I do think that, again, we just got to trade it for what it is. And at this point, people love the company and love what it does. So I would like to see it hold 13, flag again, and then take out this 1348, and then it has a lot of room back up to the mid 14s. And I think in my 2016 2016 plan, I put a target on this close to 17 to 18, and that's a nice big percentage from here.
Bios perked up Friday and had another green day yesterday. What are some names that could come into play that might be on your radar today?
A lot of people were looking at like VRX, and it gave you a small pop yesterday, but there's so much chaos around that name, so I'd be careful with it. As far as the bios perking up, they did on Friday and gave a little bit of follow through yesterday. So 2 nice days. You look here at the IBB, and some are saying we have a double bottom. Okay, maybe. If you bought it versus this low, you did pretty well the past 2 sessions. So now we'll see, just say like if it could hold this 250, and then maybe get through this 21 day to hit the 50 day, and still lagging. Look where the 200 days, but we trade for daily action. And if you look for daily action, yesterday you had it in GILD. GILD was a big trade. A lot of guys have been trying to get this for a while, and finally it broke above this 2-month base. So if it's off like 30-40 cents today, maybe it's buyable, and then it could take out yesterday's high. Yesterday's high here is 93.01 for it to continue. That'll be good. If it gives back the majority of yesterday, that would probably wind up being a little frustrating for some. If you want to take a look at VRX, which has been absolutely annihilated, you did get a green day yesterday, and when I came in here, it was a little bit, it wasn't down, which is big for this stock. So you can't even really see it here. Basically, if you're in it, just make sure that you use this as a stop. It did try and get through yesterday's high before failing a little bit yesterday. I guess you got to even go like to more of your 15-minute to see what's going on here. Does it come up? No, that's not the 15-minute. Let's go this one. Let's go to the 5-minute. Here we go. All right, so here's the 5-minute. Okay, there you go. You can get a better look there. So here's support. Now I would use this as your support on the 5-minute. So this way you don't give back everything if you're in it. Right here, if support comes in a little bit closer to 28.55, and if it were to break above this, maybe closer to 29.75, maybe you have a move back to yesterday's highs and then some. This MNK was a little bit stronger because that's not exactly where the volatility has been. It was down in sympathy. So here I would say if this holds 58, maybe you get another quick move in this MNK above 50. What is this? 59.78. Let's take a look at the daily there. Daily here. Go back. Wow, it's been absolutely annihilated. But a little day trade, so it's got some room to 62-ish if it clears that, which will be the resistance right there. So a trade's a trade, and we'll see if that could happen. And then let's just take one more look at, some guys were looking at JUNO. Hasn't really done much. Not really that compelling. But if this were to clear this small spot, maybe above 40, it can continue. And let's see what little KITE looks like. Little KITE. Nothing. So some bios look decent. Nothing so great. The LABU, which is another ETF that some people look at, it's been annihilated. You go down here, and I would say stay away from that too. All right, bios. We'll see what happens today there.
Yeah. Any other closing thoughts for us?
I just think the rally has gone on for almost 6 weeks now, and now you have these headlines, and TV is going to go nuts with it. You're going to hear about it all day long, and maybe we do pull in. And I think a lot of people would love a little bit of a pull in, even me. I'd like to see us work off the overbought condition. Get a little bit of a pullback. Create some opportunities versus hearing about the big rally that nobody loves. But until we get below some of these levels, you got to stay the course. And I'm going to take one more look at the let's go to the spiders versus what's it called, the SPX, which I showed you before. And if you look here, the spiders have been in a really, really strong trend since the double bottom lows. And you have a 3-day support area. So this is very important here. So here is your upper flag. For this trend to continue above the 8-day, you would think that we hold above this, what is that? That's 203.80. Below 203.80, then you have the 8-day down here towards 202.70. So even if we were to get down here, maybe trade through it, hit this spot, I would be trying to buy it first. But if we close below it, then we get out of the way, reevaluate, and see what's next.
All right. Thanks, Scott. Everyone, have a great trading day.